Hello and welcome to Young Turks, India's longest-running show on startups and entrepreneurship. I'm Shereen Bhan. On this episode, we bring to you a revelation and decipher the Omega Files, a 96-page report that sparked charred chatter in every corner of Startup Street. Released by early-stage venture capital firm Blume Ventures, the Omega Files, in its essence, punctures the mystery and intrigue of startup investing, the successes and the failures too. In an unprecedented move, Blume Ventures has declassified the performance of its first ever fund, for which it raised about 120 crore rupees over a decade between 2011 and 2013, in an era where venture capital was less discussed and the term unicorn was yet to be coined. It was first ever private Indian VC fund raised or closed with 100% domestic capital. As of December 2023, Blume has realized 5x of the invested capital. It's also projecting to close at 6x gross by full exit early 2024. Now, with the Omega Files, Blume Ventures aims to herald an era of transparency for the Indian startup ecosystem, bridge the gap between public and private markets, and make startup founders more responsible, placing their names out there for doing things right or even not so right. Before we bring in Karthik Reddy, one of the two founders of Blume Ventures, to talk about the Omega Files, let's first go down memory lane to 2013, when Young Turks first featured the VC team as it was building its portfolio from its first fund.
It's the most rewarding and can be the most frustrating thing to be an entrepreneur. Stay the course, surround yourself with the best team, fulfill a customer need, and everything else follows.
The measure of success comes from a conviction in an idea as opposed to the number of followers it has. That's what we look for in entrepreneurs.
Founded by two former members of Mumbai Angels, India's first angel network, Karthik Reddy and Sanjay Nath gave up their day jobs in 2010 to start up on their own with Blume. And perhaps the best way to describe what Blume Ventures is looking to do is to say that they've put angel investing in high-speed mode. Angel investors Karthik Reddy and Sanjay Nath conceptualized Blume in 2010. Spent the next 10 months talking to over 300 investors and high-net-worth individuals, of whom 55 helped them raise India's first all-domestic angel fund.
People say friends, family, and fools, sense FFF. After that round and before the VCs, there's a huge gap, and the model is basically ready to fill that gap.
At 100 crore rupees, Blume has an investable capital of 80 crores, and almost half of this has already been invested, and Karthik and Sanjay have an interesting strategy at play.
We can't fund every good idea that's out there, but we want to maximize that. So we came up with two strategies. One where we call ourselves lead investors and do at least half the round, if not more. So, and the other where either we don't want to make a large financial bet or a large time bet to a set of entrepreneurs, but we like them. And we would want to sort of share that risk with capable co-investors.
And it's a fine balance for the Blume team as well when they're managing a portfolio of 40 ventures. What helps them prioritize is knowing that they have just 12 to 18 months to get it right.
There's no question of walking off because, again, fundamentally it's not my money to do that, right? There is a fiduciary responsibility. So I have to take care of whatever I can get out of that investment. But time is as much of an investment on our side as the money is.
Well, no question of walking off. He's walking forward. That was Karthik Reddy in 2013 on Young Turks, the co-founder and managing partner at Blume Ventures. Karthik, many thanks for joining us. A decade on, you look exactly the same.
Thanks, Shereen. Thanks for having me, and thanks for digging that piece of history out. It was a walk down nostalgia lane, literally. But we still, by the way, we went and took that old office back, so it's all come back a full circle, just like our fund.
Let's put it out there. Why the decision to go public with the Omega Files?
When we started, we knew how difficult that journey of convincing Indian investors to invest in a new asset class. Where, by the way, it's all played out the way we told them the story. We actually said we might lose half our investment bets. And people were appalled that that could be an investment manager pitch. And despite that, to their credit, almost 80 investors in that first fund essentially said they'll give us a chance. So it was a very, sort of fulfilling entrepreneurial journey. But it felt like if the story wasn't told, it would belie the challenges of, what it took to build a venture fund in an era 10, 12 years ago. Today, there are 100 new Blooms in the ecosystem. And you don't want them to make the same mistakes in some sense. You feel like, we went through that journey. It's a very different environment. A lot more people are there to take the risk. But it's not about just the LPs. It's about, what does it take to be able to get the returns that the LPs are looking for, and what should be the portfolio construction. What kind of outcomes do you need to be able to make 4 or 5 times your money? So we thought it'll be a little bit of, our way of telling that we did our investors, or we gave our investors their fair due and returns. We sort of paid back the trust they put in us, and also sort of set a sort of template, and perhaps try to be a role model for young managers who are starting today.
But, Karthik, you talked about how when you started, there was just a handful, and today there are 100 new Blooms, in your words. But what would you say has been the biggest change, especially when you talk about fundraising, especially when you talk about the conversion rate? I remember, from the Omega files, you talk about the conversion rate where 1 out of every 6 LPs pitched ended up investing in the first fund. How much of that has changed? Is it a arduous sales pitch still, or is it easier to raise?
No, I think it's arduous. I don't think it's that easy. It's just that two things have changed. One is wealth managers have gotten familiar with the asset class, understood it through investing in Blume and maybe 10 others. So they're well informed when they're advising their clients. Clients are moving from potentially high net worth individuals and ultra high net worth family offices. So when you take the cumulative wealth that's willing to participate, forget about 2011 to 13, even 12 to 18, which was phase 1 of the AIF Cat 1, Cat 2 industry, 10x that money came between 2018 and 2022 into AIFs in Cat 1, Cat 2. Right? So there's been a huge upsurge in interest, right? The reality, though, is it's not about simply the money coming in, which has been the perpetual complaint about Indian, private markets. When will it pay back in spades? So I don't think Indian HNIs and Indian investors are any different. They want to see that cycle play out. So in a sense, we actually wanted to show that it is possible. I mean, literally, some of the people patted me on the back and said, "You look like a nice guy. Here's 1 crore. I don't know if you'll actually make it through. If you return a capital, we'll say well done." And as late as 2015, I mean, I can imagine them saying that in 2011. After 4 years of portfolio construction, also they didn't believe it might happen. So I think that it was a sense of fulfillment to be able to say it out loud. The point you made around public disclosure, I feel in general, my entrepreneurs tend to take my advice seriously only if I'm practicing what I preach, right? So I can't on one hand tell them, public markets are daunting, but that does not mean you shouldn't go IPO. You should build for 20-year journeys. You should start preparing for IPOs in 8, 10 years and continue building for 10 years after that. Which all means everything you said, with disclosure, being naked out there in the public markets. But then I can't hide behind a cloak and say, I will not do all of that myself. So it felt like a much easier win in those conversations with my entrepreneurs if I did it myself.
Karthik, let's talk about some of the lessons, some of the learnings, and some of the sort of, revelations that we've arrived at through the data that Blume has put out. And I want to pick up on one of the interesting ones. India's Silicon Valley, Bengaluru should have led returns, but it hasn't. It's actually been the Delhi NCR companies that have yielded the most substantial multiples versus all other cities. Now, why do you believe that's the case? Because Bengaluru gets the disproportionate amount of mind space and media space as well, but in terms of returns, it's Delhi NCR that's delivered better.
I trust you to pick the most controversial one. I think the Delhi NCR folks are sort of rejoicing, but as you and I know, it's one data point. It's one vintage. That said, Delhi continues to do well. I think Delhi entrepreneurs and Mumbai entrepreneurs are underrated when it comes to their ability to have that long-term orientation as entrepreneurs and build beyond IPO and build beyond 10 years. Bangalore was a relatively relatively speaking, a smaller, newer entrepreneurial ecosystem when tech started in a big way. And I think they're waiting for their role models to emerge. I think it's inevitable it'll happen. In Indian hands, maybe Flipkart would have gotten there. Now it's Walmart owned, so they're taking their time. So I think more and more Campola is getting there, I guess. And so I think a lot of ecosystem building, Shereen, is about role models, right? And they haven't been as visible till 4-5 years. Even if you look at the recent IPOs, they were all, Policy Bazaar, Nykaa, Zomato, they're all Delhi Bombay companies, right? And so I think it's just a matter of time before Bangalore shows up.